Hey guys, what's up? So we are in the final quarter of the year. It's October 1st, 2021. In this video, I'm going to share with you all some things. As you know, September has been a very rough time for the markets. It was the single worst month since March 2020, which was the coronavirus crash. And typically, September and October are bearish months in the market. So some of you all have been taking hits left, right, and center, getting slapped left and right. So I just want to come and share with you what you should be doing, what to expect. And in this video, please take it as educational advice, right? Just just take it as pure education. And hey, I'm going to make some predictions. It might or might not happen, but I'm just going to take reference from previous drops. All right. So let's get right into it, and I'll share with you what to do with regards to stocks and options. Okay. So let's go. All right. So this is the chart for the S&P 500. So this is the SPY, and in the community, we basically share with you all about how it always bounces in the EMA 50, EMA 50. So again, this is the 50, the 100 is the 200 line, right? So it always drops, it drops, it drops, it drops, and it typically has a bounce. This time, however, in September, it wasn't the case. It came here and then it broke below, right? Some of us enter actually here. It broke below, came here, right? It tried to hit back the EMA 50, but it got resisted very badly and it dropped even lower, right? So that's what we're seeing. And again, it's not unexpected, all right? So if I actually show you the charts and if I actually take reference previously, right, this is what you'll actually see, right? You'll actually see that in September of last year, very similar. It was a very similar drop, and it dropped all the way to the EMA 100. It dropped the EMA 100. Okay, but what I want to actually share with you all is this: all these EMA hundreds and all that is just based on current prices. Okay, it's based on current prices. What's more important to actually see is this. Okay, and please take note. All right, what's important to actually see is how much was this actual drop, right? So this actual drop is basically, if I do a calculation from the top to the bottom, right, it was a drop of about 10%. Okay, and just to share with you all, 10% drop is a proper decent drop, as in a correction. Okay, a 10% drop is something that we will see every year. It should happen, typically happens at least once a year, right? So a 10% drop is something we'll see. So looking back, right, we are in the middle of a correction, right? And interestingly, if it happens to be a 10% drop, this is where we're going to go. Currently, right now, from the peak, we're only at 5%. Actually, we're only at 5%, right? 10% drop would basically be here, all right? It would basically be around 407. So if you ask me, right, if it's going to be anything like the September, October crash of last year, we're probably going to see a proper correction of about 10%. And that will mean that your SPY has a lot more room to actually drop, okay? So one thing I want to share with you all is this, and you must understand this when you're trading, when you're investing. The higher the climb, the harder the fall. The higher the markets go in the future, the bigger the volatility, the bigger the drops in terms of dollar value will be, right? It will be even bigger. So hey, guess what? You'll see even more volatility, and you've got to understand that that's part and parcel of the game, right? So like I told you, if you think that a discount now, hey man, 10% correction, which is considered a decent drop from its highs, is still far away. It's at 407. Okay, and the same thing we can actually apply for stocks as well. All right, so let's say for example you're looking at FB. All right, let's say you're looking at FB. And we're looking at Facebook, for example, right? So again, sure, oh great, EMA 50 bounce, 50 bounce, 50 bounce, right? Right now it's come to the 100. You're like, oh great, let's go and buy. Again, all of this doesn't apply when you're looking at a proper market correction. Okay, so let's take a reference again from last year. Let's take reference from last year, and let's see, right? So as of last year, the September drop, this is what happened to Facebook shares. Okay, so let's see how much of a drop it was. So in terms of Facebook, the price actually dropped 18%, right? So roughly about 18% from its highs. I'm not being 100% accurate, but yeah, roughly about 18% or so. Okay, so let's assume it's a 18% drop, which actually happened in September, right? And coming back to today, how much is the 18% drop? Let's have a look. Currently right now from its peak, we are only at about 11%. So 18% drop, my friends, will be somewhere here, which is the EMA 200, right? So again, this is what we're looking at in terms of further downside, okay? It's very, very important to reference and actually see, and you must understand you cannot just blindly be using the EMAs, right? So whenever a correction actually happens, this is how far more it can actually drop, right? Which is the reason why, right? I'm saying I'm staying away from calls. I'm not buying any calls right now. It does not make sense. There's more downside to come. Just watch and see. All right. So again, this is basically what is actually happening, right? Let me do the same thing for maybe another stock like Apple, for example, right? So again, definitely a good stock in the long run, right? So a lot of people got very excited because they're like, oh yeah, man, let's go, right? It's at EMA 100, right? But let's have a look, right? So if you actually see the trend, right? If I actually pull it out, so this was the trend in September, right? So September, you can see a large drop. For Apple, this drop was, yep, this was a 25% drop, right? In September, this was a 25% drop for Apple after a huge rally, right? Obviously last year, a big rally, but it dropped about 25%. So that's again what we're actually expecting. And what's a 25% drop? Let's have a look. Right, 25% drop would mean that the stock price from its peak will probably drop to, geez, holy, 117. That's again pretty normal for Apple, right? So again, I'm just using it as a reference. It might not drop as deep, but that's pretty much what we can actually possibly expect, right? Again, if the QQ has a lot more to drop, then for sure we'll see a similar pattern in stocks like Apple, in stocks like Facebook, for example. It'll be very, very similar. Okay. So again, let me repeat myself again. This is the reason why I'm not buying calls. All right. If you are buying calls, and even if you're holding out for long term, for example, you're just going to see your positions bleed and bleed a lot. Right. So my suggestion and what I did personally was I closed out all my buy calls, and I'm waiting, and I close it out at a loss, but I'm waiting to actually enter when this entire drop, right? So typically it actually happens, probably will happen really fast, really quickly in October as well. Yeah, and once the market does properly recover, that's when I'll actually be entering. But for right now, it does not make sense. All right. So that's number one. The next thing which I want to actually share with you all, which might be something quite interesting for you guys, is to actually understand how the VIX actually works. Okay. For those of you all who don't know what the VIX is, the VIX very simply is, right? The VIX very, very simply is, the volatility index, right? It's the volatility index. And as you can actually tell, when the VIX is very high, that basically means that, premiums are actually very high as well. All right. So as you can tell very, very clearly, currently right now, the VIX has actually shot up really, really high. Okay. So if you have noticed that, your call option drops in terms of, the losses that you see of call options is so fast and so furious. Like one day is down 30%, 20%, 40%. The reason why that is happening is simply because the VIX is very, very high, right? So again, let me just share with you something. When you're buying call options, you must understand that call options are decaying assets, right? So you're buying something that is not an asset, it will lose value over time, right? So when you choose to go down the buying route, you are already swimming against the tide in that sense, right? You're not swimming again with the tide, you're swimming against the tide because that's just how call options are. They are a decaying asset. Of course, you can still make money, don't get me wrong, but buying of options, generally, you are swimming against the tide. That's what it is, right? But when you decide to go and buy call options, when the VIX is very high, then you're swimming against a freaking tsunami. Then you're trying to swim against a tsunami. And guess what happens when you try to swim against a tsunami? You get screwed. You get wiped out. You get completely washed, right? And that's exactly what's happening if you go and exercise call options right now. Does not make sense. As you can tell, typically again, the support levels are somewhere around here, about 16 currently right now. When it spikes, it goes, in this current market situation, it goes to about 23. Highest it jumps to is about $30 or so. All right. And what happens again, very simply, is that you know, so you have to look at the VIX, okay, seriously, right? It's very, very important. So again, when the VIX is high, right, when the VIX shoots up very, very high, you know, buying of options will not be ideal. Of course, selling of options would be a lot more viable because premiums are a lot higher, right? But when you're buying options at these kind of periods, when, if let's say, for example, the VIX happens to drop back down again, the value of option will decrease rapidly, all right? You lose a lot of money. Okay, so again, this is another reason why you don't buy. So it's very, very important to understand when to go aggressive and when to be defensive when you're looking at the markets as a whole. All right. Okay. So again, so what should you be doing right now? Right. So very, very simply, you know, a few things you can actually go and do. Like I mentioned to you, if you look at different stocks and stuff like that, there's still more downside. Even if you look at Facebook, for example, like I told you all, right? You can't just be looking at moving averages. You know, in a proper correction, you know, again, a proper correction is at least a 10% drop in the index. We're only halfway there. There's still a lot more downside to come. So again, if you want to go and buy, again, it might happen, it might not happen. Okay. If it does, you know, you want to take some bites, but you want to make sure you have bullets to actually enter when it actually comes back down to about $311 or $300 even. Okay, so that's something I actually want to share with you. It's very, very important for you to understand. All right. So, you know, just give you some of my other favorite stocks, right? So I always talk about Sea Limited. I really like Sea Limited, but of course it comes with volatility as well. So if I actually look at, you know, if I take reference from September last year as well, right? If I take reference from September last year, right? It might seem like it's small, right? It might seem like, hey, it's just a small drop. But again, I urge you to understand this one thing: the higher the climb, the harder the fall. All right. So again, this was close to a 20%, 18% drop, right? So this was 18% drop in stock price, which happened in September last year, right? 18% drop. So if you're looking at an 18% drop, right, from its highs, we are looking at SE for an 18% drop. We're looking at SE to drop at least to below $300, right? So that's where I'm expecting it to go. Very, very likely, right? Most likely, again, it's not like it'll just bounce off, right? In a proper correction when the market is correcting, this is where it will come to, all right? So again, you don't have to be in a hurry to go and buy shares. There's going to be more drops going to come, and you want to be prepared. This is exactly what's going to happen in October. If you are in call options and stuff, and you refuse to close, you will bleed, and you will bleed a lot more, right? So if you're not able to take that, then my suggestion very simply is to close it and to enter again at better, lower prices. All right. So that's again just my point of view. I hope you guys found this video useful, and hopefully it helps you to understand what are the factors you should be looking out for in entering stock positions or in entering any option positions. All right. Take care, trade safe, and let me know.